Stablecoins are definitely one of the biggest use cases and catalysts for mass adoption in crypto. In fact, 2 out of the top 10 crypto projects in terms of market cap are stablecoins. And more specifically, they are US dollar stablecoins. Why? Because there's so much demand for a US dollar stablecoin globally than any other currency. Everyone wants the dollar and they want to be able to move it 24/7, internationally, instantaneously, and at a low cost. And on top of that, since the stablecoins are backed by US dollars, there's an opportunity to pass on the US Treasury bill return that is backing a stablecoin. And you can democratize access to interest, and that is very, very powerful, especially for people who live in currencies and countries that there is a lot of destabilization and inflation. Imagine people around the world who don't have access to a bank account can now earn safe yields off of their phone using stablecoins. That is incredibly powerful. The largest stablecoin provider today is USDT, and they have the third largest market cap after Bitcoin and Ethereum. It is the OG and considered to be the first mover in the space. It currently dominates around 69% of the stablecoin market, and it's valued at $120 billion. And its 24-hour trading volume is a whopping $158 billion. And fun fact, trailing behind is USDC at number 6 on the list. It's currently valued at $35 billion, which is 70% less than USDT. Both of these companies have very different founders and backgrounds. The parent company of USDT, or Tether, ICN.live, was headquartered in Hong Kong before they moved to the British Virgin Islands. Whereas USDC is issued by Circle in collaboration with Coinbase and is headquartered in the United States. So in today's video, I'm going to go over everything you need to know about stablecoins. I'm going to look at the current state of stablecoins. We'll look at the biggest differences between USDT and USDC because they are the largest by far, the 2 largest by far. We'll look at some of the current use cases across decentralized exchanges and apps. And then finally, and most importantly, I want to show you a couple of different ways that you can earn incredible yields on your stablecoins. This is the video you need to understand everything that's going on right now with stablecoins, including all the opportunities available today to earn extra income on your coins. Stay until the end and I'll show you step by step how you can find high yields with relatively low risk and how I found a couple of gems where you can earn over 10% annual interest on your stablecoins. You do not want to miss this. My name is Karim. This is my 3rd cycle in crypto, and everything I know I want to share with you. All you have to do is smash the like and subscribe button and make sure you don't miss out on any of my videos. So before everything, let's talk about the literal elephant in the room, or shall I say in the United States. Yes, Trump is the new president and Bitcoin touched an all-time high of $1,000. This is super exciting for the industry, and I now have very high conviction that a bull run in 2025 is on its way. We know that Trump is pro-crypto, so I'm excited to see more confidence and liquidity pour into the industry. All right, so it's time to top up our bags and get ready for 2025 because we should grasp this opportunity and make the most of it. First up, let's look at the current state of the stablecoin industry. First of all, it's clearly dominated by US dollar stablecoins, with projects being backed 1-to-1 with US dollar reserves. And second, the total market cap of these projects is $185 billion, with USDT dominating almost 70% market share. Let's pull up the chart so we can have a closer look. All right, great. So I pulled up the top stablecoin tokens by market cap on coinmarketcap.com. If we have a look here, we can see that the total market cap today is $182 billion. And if you look through this, it's growing, and it's been growing for a while. And I'll show that in another view as well. The trading volume is insane. It's $122 billion. But if you look at the top players, USDT is dominating by far. Tether has $122 billion market cap. Trailing behind is USDC, as we mentioned, at number 6 at $37 billion almost. Up next is DAI at a $5.3 billion, so significantly smaller than the others. And then you have others like First Digital USD, USDT, PayPal USD. I mean, look at this list. There's a lot of projects building in this space. But, you know, you don't know who those founders are and what the projects are, the people behind them are doing. And so I just want to focus on the top 3 today. And actually, we'll just look at USDT and USDC in more focus. So if we look at USDT, I'll just come here. We'll look at the market cap just to show you kind of the user adoption that's been happening since all of its time. And it's just massively growing. I mean, it started off, let's say in 2015, as you can see, and it's been growing up, you know, at a high trajectory because of all the use cases and all the exchanges and all the liquidity and all the and DeFi and all the different, you know, aspects that it can be used in. If we look at USDC, and we look at its market cap also over all time, it has gone up and then back down a little bit. But in general, the trajectory is upward and the trend is upward because of the use case. So I wanted to show you guys that just right now, and let's continue with the video. So looking at that insane growth in market cap, it clearly shows product market fit and user adoption across time for those 2 stablecoins, right? Especially USDT and USDC. I would say the 4 main reasons why stablecoins make sense and why they gain massive adoption so quickly are four reasons, as I said. Number 1 is price stability. When crypto prices like Bitcoin, Ethereum, Avalanche, and so on are very volatile, it makes sense to have a coin pegged to the dollar so you can jump in and out of trades. Number two, there's global accessibility and speed, right? So USDT and USDC enable fast borderless transactions 24/7 at any time at a very low cost, especially for international trades. It beats banking by far. So that's number two. Number three, there's transparency and asset-backed assurances, right? So one of the greatest things about blockchain is transparency. Stablecoins, they often get regular audits. You can see it on the chain. You can see where the reserves are and how much the reserves have been added or deducted. So that's all clear. And that builds trust, assuring users that their tokens are backed by real assets. If you look at the traditional finance, we don't really have transparency on what's going on in the back end, especially with the central bank and banks in general, right? So this is very, very, very interesting and why stablecoins are doing quite well. And number four, which is something that I'm very excited about, is DeFi. Stablecoins have unlocked so much innovation in the DeFi space where users can lend, they can borrow, they can earn yield on their assets without any intermediaries or permission. And then finally, it's opened up a whole new revenue opportunity for users looking for returns on stable assets, right? That's an incredible opportunity that just further strengthens adoption. And so next up, I want to discuss the difference between USDT and USDC. In my personal opinion, the biggest difference between them is probably transparency and oversight. USDT was the first mover, so it was definitely ahead of the regulations when it first launched. But there has been some controversy around USDT as well, especially around auditing its reserves. Transparency wasn't really there with USDT in the beginning, and Tether initially claimed that every USDT was backed 1-to-1 by US dollars held in the reserve. But over time, investigations revealed that Tether's reserves were more, let's say, complex, often backed by assets like loans or commercial paper, as they call it, and other cash equivalents, rather than just cash alone. Guys, my purpose here is to get you guys thinking, right? So if you see a stablecoin that's much bigger than all the others, try to understand where it started, where it's going. And I also want you guys thinking about, there's more than one player in the space, what they're doing, and then, help you make the right decision on where you should be looking at and investing your assets. So in 2019, the New York Attorney General launched an investigation into Tether, alleging that they had covered up an incredible $850 million loss by tapping into the reserves. This led to an $18.5 million settlement in 2021, where Tether then had to agree, essentially, to provide regular disclosures of its reserves. Now, USDC, on the other hand, has had more transparent approach because they're based in the US, they're a US headquartered company. They need to play by the rules. Otherwise, somebody's going to be going to jail, which they definitely don't want to do. But what I really like about USDC is it's been designed from the beginning with compliance in mind so that they could adhere very closely to US regulations. So with all that in mind, there are 5 major differences between USDT and USDC. Number one, you have transparency and audit reserves. USDC is known for its transparent audit reserves, while USDT has been scrutinized over it. Number two, regulatory focus and compliance. USDC was designed for regulatory compliance, whereas USDT has faced legal issues and they paid fines. But let's be fair, they have improved their systems and they're being more transparent, so that's great. Number three, you have backing and reserve composition. USDC is backed almost entirely by cash and high quality cash equivalents like US Treasury bills, while USDT holds a mix of cash and cash equivalents. And number four, issuer and governance structure. So USDC, as I mentioned earlier, is issued by Circle and governed by the Center Consortium, which includes Coinbase, by the way. So they're based in the US, highly reputable companies, and as I said, compliance is very important. Whereas USDT is issued by Tether. They are part of the IFINX umbrella, which includes Bitfinex, which is an exchange. So in that sense, the governance structure is a little bit different than USDC. And then number five, I would say market use and adoption. USDC is generally more popular in the US, whereas USDT and Tether are more popular in Asia and other emerging markets. And this takes us to the next part of the video, which I'm very excited about, is how do we make money with these stablecoins? Let's look at some interesting innovations in DeFi in terms of yield farming and how we can make money off these stablecoins. Basically, stablecoin yield farming allows investors to maximize their returns in 3 ways. Number one, there's lending. Number two, you can provide liquidity. And number three, liquidity mining. So on top of topping up our bags for the next bull run, we should also learn about the incredible ways we can generate income from yield farming. So today I'll just focus on how we can generate income with our stablecoins from lending, which is exactly what it sounds like, right? It's essentially lending out our stablecoins, and in return, we we'll get interest on it, becoming our own bank. If you're still here, this is the part of the video you've been patiently waiting for. I'm going to show you step by step how you can explore the fascinating world of DeFi. But the value that I'm going to show you is I'm going to teach you exactly how to find the less riskier plays by teaching you how to filter and tweak your searches. So let's pull up DeFiLlama.com. This is a great website where you can see live, transparent information about everything that's happening in DeFi. So if we scroll down, well, first on the homepage, you'll see total value locked in the entire crypto industry is $96.4 billion. That is insane. It's very interesting because this is definitely going to grow, and I'll kind of show you a little bit why. So if you go down to the bottom here, you will get to stables. If you click on stables and we do an overview of it, we get to see exactly what's happening with every stablecoin that's launched on every chain. So the total stablecoin market cap, as we mentioned before, is $176 billion. USDT dominance is 69.2% as well, which is massive. They have the lion's share of the market. Next up, what I want to do is I'm going to go up here. You go to the percent yields right here, and you click on that. This will take you essentially to all the yields that you can do in DeFi. But for this specific video, we're going to be focusing on stablecoins. So you'll come down here and you'll click on stablecoin pools. And what this does is it'll take you to all the different stablecoin yield opportunities out there. But you need to be careful, obviously, right? So there's so many projects, there's so many chains, there's so many different stablecoins. You just have to, to lower your risk, just follow me for a bit, and I'll teach you how to bring that risk a little bit lower. So what we're gonna do is we'll update the TVL, the total value locked. We want to have a minimum total value locked in a certain pool of $5 million. Let's just do that. So that'll automatically filter out the low risk, the high risk, low pool, low project pools. So we'll do that. That's the first thing we do. So you can see that that's already updated here. Next up, what we're going to do is we'll look at the chains. So I'm not really interested in every chain. And if you look here, look, I'll scroll down. This is insane. There's so many chains right now. So I don't want to do that. I'll clear all. I want to look at Ethereum. So we'll put that. And then here you just need to type in, I want to look at Base because that's part of USDC and the Circle ecosystem. So I'll do that. Avalanche, I'm also very bullish on. There's a huge ecosystem, a lot of liquidity, a lot of users in that space. Trader Joe is a huge one as well. So we'll put Avalanche. I'm just going to search them here so it's faster instead of scrolling. After that, we have Polygon. I think it's the largest layer 2. They have a huge liquidity as well, huge ecosystem. So I'll look at that as well. So I'll put them in here. Once that's done, next thing I'd like to do is just look at the token, right? As we said, there are so many tokens here. So let's put in just USDT. And then here you click it. And then we'll put in USDC. And then I wanted to we'll add DAI just to see if there's any interesting pools in DAI as well. So that's that. So great. So what we've done is basically said, we only want to look at pools that have a minimum of $5 million TVL. We only want to look at Ethereum, Avalanche, Polygon, and Base. And we only want to look at USDT, USDC, and DAI. So with that in mind, what we do next is essentially look at the APY. So we'll go to APY here and we'll tap from the top to the bottom. And here's where you start to see 20% APY, 15% APY, 15, there's a bunch starting from 20 going all the way down. But what we want to do is essentially, I don't want to create a pool I don't want to create a liquidity pool today. I want to look at the lending opportunities. So we're just going to focus on those. So we'll look at USDT. Let's look at this one. Actually, this is a new one that I didn't see before in my research. So I'll tap here and this will take you automatically to the website and we can do this together. So this is ThorSwap Finance. Let's have a look. You can earn BTC, you can earn USDT. Oh, look, USDT here there's 17.7% returns on it. So that's an interesting one where you just connect your wallet with MetaMask. You can deposit your USDT. Something that you need to be mindful of, obviously, is that 17% is going to change depending on how much liquidity is in the pool as well. So that'll fluctuate, but it's usually an average of that. Then you also see USDC here at 15.6%. So that's interesting. This, for me, although it does fit in the categories that we just said in terms of $5 million minimum TVL, would not be something that I would look at. My risk threshold is a little bit lower. So I would look at projects outside of ThorSwap. I would look at Aave, which I'm going to get into next, and other kind of bigger protocols. So that's super interesting. what I want to do next is, so we've seen Thor. That's great. I mean, that's something that, I'm going to look at as well, but I'm, again, hesitant on. But I want to go into Aave. So Aave is a massive, is a huge DeFi protocol that allows people to lend and borrow crypto, essentially, right? And it's very easy to use. It's been around for a very long time. I have high trust in it, and it's decentralized. So unlike other protocols that have failed before that were centralized, this one is completely decentralized, which I prefer. So we'll go into Aave. I'll go into Ethereum. So you can go into Ethereum right here. And if you scroll down, you can see USDT right here is at 14.14%. That is incredible. To be honest, a platform like this with massive liquidity, with a huge user base, 14% on your USDT is a great return. So that's something that I definitely look at. USDC is at 4.6%, which is all right. I mean, I guess the banks are similar to that. DAI again is at 20%. I guess the risk tolerance as well, depending on your risk tolerance. So that's something that I wanted to just show you. You could also, what's interesting here is then from Ethereum, you can move on and check out Base. So they have obviously options on Base. On Base, you'll notice that there is no USDT, obviously, because they want to, keep USDC and push that. But here on Base, USDC is at 8.28%, which is definitely better than the bank is offering. So that's very interesting. So that's another one that you could look at, or we could look at. And then we can also go here and look at Avalanche. There's also more opportunities in Avalanche. USDT is at 7%. Basically, what's nice about Aave is that you can just kind of toggle through different chains, look at the bigger chains, in my opinion, and then find an opportunity that makes sense for you. Outside of that, Aave has been performing quite well. I mean, I'll pull up their chart as well, and we can look at their price point. I mean, they've gone up, and now they're kind of trading sideways. I think it could be a good protocol to look at during the next bull run. Next up, I wanted to look at was Fluid. Discovered this one, and I feel like this is a great opportunity and great returns on it as well. So Fluid has $898 million in TVL, which is exciting. If we go into the lend, I love the UI and UX, very simple to use. I wanted to show you guys this one as the gem because it's so easy to use and very clear on what it does, right? So here you have a couple of options: USDT, you have USDC, and you have ETH if you wanted to. But let's look at the stablecoins today. We'll look at USDC, which is offering 8.8%, while as USDT is offering 9.54%. These are, again, the idea of this video is not to come in and show you 1000% APY and just, at the end of the day, it just doesn't make any sense and it's not sustainable. The point of the video today is to really show you protocols that are low risk, that have big, big ecosystem, high liquidity, safer bets, safer investments that you can make today. So that's the point of what I wanted to show you today. I hope a lot of this makes sense. And if you have any questions, please drop them in the comments. I'd be more than happy. We'll be answering them all as well. So I hope that was informative. And yeah, let's get back to the video. Now I need to obviously give you a disclaimer that there are risks here. It's a space that's pushing the boundaries constantly with technology, finance, and smart contracts. And especially when there's a lot of money involved, you just need to be aware and cautious. So don't invest what you cannot afford to lose. Guys, we launched our flagship ecosystem product, ICN.live. It's a brand new and fresh Web3 news platform where you'll find articles in gaming, AI, blockchain, and of course, Bitcoin. And if you're interested in receiving great insights and market updates straight to your email, don't forget to subscribe to our newsletter. It's a Web3 newsletter that keeps you informed. You can find all the details and the links in the description below. See you next week. Thank you very much for watching.